Hey, welcome back. In today's video, I want to share Redfin's latest housing market update just posted on Thursday, December 14th. I want to read their first part of the report here to provide some context here because I was just cringing when I was reading this. It says, this week has brought a few pieces of good news to the US housing market. Mortgage rates are dropping, new listings are rising, and mortgage purchase applications are up by nearly 20% from their November low point. So it's true that rates overall are decreasing. So the average 30-year fix has been decreasing more or less for about 2 months now. And I'll give you an update regarding rates today because rates decreased big time once again. So that is 100% true. Rates have been decreasing even though they're still higher compared to 1 year ago. It says though that new listings are rising. Now I want to share a graph showing the number of new listings this year. And that is right here. According to Redfin's data center on a national level, here's a look at the number of new listings. Do you see new listings increasing or decreasing? So right now, at least for ever since really the summer months, new listings have been decreasing, and over the past several weeks here have been decreasing big time. Now, when we add 2022, you can see here that new listings increased by 7.6% compared to 1 year ago. But the only reason why we have more new listings right now compared to the same time frame in 2022, I should say not the only reason, but the primary reason is because new listings fell off the cliff during the last half last year. And because new listings fell big time last year, that's one of the main reasons why new listings are up by nearly 8% right now. So when I read this saying that new listings are rising, they should say that they're rising on a year-over-year basis. Also, it says here that mortgage purchase applications are up by nearly 20% from November. Keep in mind though, again, providing some context here, the level of the amount of people submitting loan applications to buy houses, according to the MBA, about a month and a half ago, was at a 3-decade low, the lowest level since approximately the year of 1995. So an extremely low level of the amount of people submitting loan applications to buy houses about 1.5 months ago. So should we say that applications are increasing big time, increasing by nearly 20%? A 20% rise from multi-decade lows is not a big improvement. Also, according to Redfin, when looking at the amount of people submitting loan applications, even though it has increased as of late, it still has decreased by 18% compared to 12 months ago. So hope you guys appreciate that additional clarification. And I get that, yes, the first part of your article has to be intriguing. And of course, if people read this, they might say that, oh gosh, rates are decreasing, so therefore my purchasing power is greater, so I can afford a more expensive house. And on top of that, potentially my payment would also decrease as well compared to 2 months ago. That's good news. Also, it says here that new listings are rising. So just an uninformed buyer may read this and say, okay, rates have decreased. We're also seeing more new listings. Therefore, I should see more options of houses to buy, and maybe I should buy a house. And they also say here that applications increased by about 20% from November. But again, provide some context here. Hope that clarifies what is actually really going on right now. So in any case, according to Redfin here, daily average rates, that's according to the Mortgage News Daily, yesterday decreased to 6.82%. That was a daily rate on Wednesday, the lowest level since mid-May to be exact. This marks the first time rates have dipped below 7% since July. It also says here that rates dropped after the Fed brought good news to title homebuyers. If you guys are a title homebuyer, please let me know in the comments below because I don't know what a title homebuyer means. I believe they mean to homebuyers and excluding title here. In any case, yes, it's good news if you're a home buyer looking to buy a house right now that rates decrease big time. Over the past 2 days, rates have decreased by about 47 basis points or about 0.47 percentage points in the past 2 days alone. Probably one of the biggest decreases on record. because yesterday on Wednesday was the biggest decrease, down by about 27 basis points in one single day. Anyway, so if you guys are a title home buyer, let me know in the comments below. So in any case, it says this is indicating they're on a path toward lowering interest rates by the Fed more and also sooner than expected. I went over that in a separate video, but basically they're calling for 3 rate cuts next year and more rate cuts in 2025 and 2026. And because of that, the market reacted greatly, and that's why rates decreased so much over the past couple of days here. Okay, changing gears slightly here, let's talk about home prices. And when I'm talking about home prices, I mean the median sold price nationwide. That increased by 4.5% compared to 12 months ago, rising to nearly $365,000. That's the biggest year-over-year increase since October of 2022. But again, prices are up partly due to the fact that prices decreased so much during the same time frame last year. Let's actually talk a little bit more about this because there's a lot of discussion points here. So for one, prices are up by 4.5% compared to 1 year ago, which is astonishing given the fact that we had 8% rates about 2 months ago. So when talking about any metric that has to do with a closed home sale, this is really what our housing market was like approximately 1 to 2 months ago. So looking at the median sold price today, that is based on a closed home sale in this regard over the past 4 weeks. This means this is based on interest rates approximately 1 to 2 months ago when the home buyer wrote their offer to the home seller and they got their offer accepted. So therefore, this rise of 4.5% and the median sold price at approximately $365,000 is really when rates were much closer to 8%. And when we had average rates at 8% about 2 months ago, that was a 23-year high. So it's pretty wild to see that prices compared to the previous 4-week period, which was announced 1 week ago, are up. On top of that, they're also up by 4.5%. So my question for you guys is, if you guys think there's going to be a housing market crash, how is that possibly going to happen? I know we're only talking about the demand side here. There's a supply side as well. But on the demand side here, home prices have not decreased very much compared to the 8% rates we saw 2 months ago. Now rates have decreased to about 6.6%. So what do you guys think is going to happen? Time will tell, and I'll definitely keep you posted, but the demand side is kind of painting this picture right now that we're going to see demand increasing because rates have fallen so much. I know they're much higher compared to what we saw in 2020 and 2021 when the average rate was at 3%. But buyers right now who went off the sidelines when rates were over 7.5%, now they're at 6.6%. If this continues here, my worry is that this is going to increase demand and therefore cause prices to increase next year. Of course, again, this is only the demand side. So what I'm going to be closely following in the next several months here is the supply side. Are we going to see a surge of new listings causing prices to decrease or putting downward pressure on prices? Or will inventory levels stay at very low levels and demand rising because rates have increased or rates have decreased so much over the past 2 months here? One more thing I do want to add is that, a lot of people have rates well below 5%. I think the vast majority of Americans who have houses with loans on them have a rate below 5%. So I don't foresee we're going to see a surge of new listings from rates at 6.5% or anything in the sixes. Because if someone's looking to buy a house or sell their house and buy a new one, if they have a 3% rate, I don't think 6.6% is going to get them off the sidelines to sell their houses unless they're forced to. But that's just my thoughts regarding home prices. Please leave me a comment below with your thoughts regarding this. There's a lot of variables involved here, but just something I was thinking about today regarding the decrease in rates, how that's going to impact demand and prices next year. So here's a look at home prices according to Redfin on their data center. As you guys can see here, we did see a small increase compared to the previous week, which is crazy given the fact that 2 months ago, we had rates at around 8%, and we're still seeing houses close based on rates very close to 8%. Because again, you got your offer accepted, approximately 1 to 2 months later, the house sells. So we're still seeing sales right now in which buyers probably have a rate at above 7.5%. So it's pretty crazy here that prices tanked last year, I should say the second half last year, whereas this year so far, we're only seeing a seasonal decrease in prices, and we're also still up by about 5% from 1 year ago. It's going to be interesting to see what the end of the year looks like here, because we could be in a scenario here in which prices are up by about 4 to 5% by year end. Okay, changing gears again, let's talk about the average monthly housing payment, because of course, because rates have decreased, average monthly housing payments of would-be homebuyers have also been falling as well. So according to Redfin, during the 4 weeks ended December 10th this year, the average rate, or I should say the median monthly mortgage payment, was $2,503 per month at a 7.03% rate. That's down $233 or 9% from the all-time record highs that was set back in late October, the lowest level since April this year. Anyway, lots of mistakes here. Anyways, so one thing I do want to mention is that, again, over the past 2 days, this is Wednesday and Thursday this week, rates have been decreasing big time, down by nearly 50 basis points in 2 single days. Just absolutely insane. So let me just provide an update regarding rates. So this is the time of filming this video here, I should say, is about 12:45 p.m. In Pacific on Thursday. So as of now, the 10-year is at 3.906%, a huge decrease of 13 basis points today. That's one reason why rates have decreased to 6.62%. Again, for people with exceptional credit, putting at least 20% down. These are the best rates overall on average nationwide. 6.6%, well below the peak that was set 2 months ago at 8%, but still higher compared to the 12-month low at 5.99%. FHA and VA loans is around 6.15%. As you guys can see here, the sharp decrease over the past 2 days, just absolutely crazy. I've never seen this before, to be honest with you guys. On December 13th, it fell by 27 basis points. And today, another decrease of 20 basis points. So that marks a 47 basis point decrease over the past 2 days alone. And right now at 6.62%, that's the lowest rates going back to May 12th this year. So getting back to Redfin's report here, the weekly rate, according to Freddie Mac, is at 7.03%. But again, daily rates as of Thursday have fallen to a 7-month low, down to 6.6%. So this decrease in your monthly housing payment is probably much greater right now based on daily rates today. Okay, let's have a look at pending home sales, new listings, as well as active listings, or the amount of houses for sale. Let's first talk about pending home sales because that decreased by 7.8% year over year, whereas new listings increased by 7.6%. That's the biggest uptick since July 2021. But again, the increase is partly because new listings were falling big time at this time last year. That's why we're up, or one of the reasons why we're up compared to 12 months ago. So again, just looking at year-over-year changes, it really doesn't tell us the full story because this is talking about the change compared to 12 months ago and not the current trajectory here. So it appears here that pendings are decreasing, whereas new listings are going up. So let's have a look at pending home sales according to Redfin here. So pending home sales, let me just include 2020 and 2021, are down by 7.8%. It's not as down as great compared to last year. Last year is in black here. So for example, right here, basically in early July, we're down by 12.8% compared to the same time frame 2022, whereas right now it's only down by 7.8%. Also, to start the year, we're down by a whopping 29.6%. Now it's only a decline of about 8%. So we are seeing a seasonal decrease in the amount of offers being accepted by home buyers and home sellers. But again, it's not falling as great as it did last year. And that's one of the reasons why the delta this year compared to last year is actually getting more narrow here. And again, looking at new listings compared to the past several years here, Again, even though it's up by 7.6%, it has been decreasing fairly substantially ever since October this year. Having said that, though, it is getting very close to 2020 as well as 2021. Let me exclude 2022 here. So right now, for the 4 weeks ended December 10th, there's around 58,000 new listings. At this time in 2021, there was 69,000 and approximately 71,000 in 2020. This means we're still missing around 10 to 12,000 new listings compared to 2020 as well as 2021. Let's also have a look at the amount of houses currently for sale or active listings. That's down by 5.4% right now. And we're more or less right now seeing a seasonal decrease in the amount of houses currently for sale. This means, according to Redfin, we're down by about 50,000 fewer houses for sale right now compared to the same time frame of 2022. Which I will say, though, that when looking at data according to Realtor.com and AltosResearch.com, both those companies are reporting increases of inventory compared to 12 months ago, whereas for whatever reason, Redfin's reporting a decrease of 5%. All right, let's get back to Redfin's report here and talk about the month supply. So on a national level, the month supply is at 4 months. That's a small increase of 2 points compared to 12 months ago. And according to Redfin here, 4 to 5 month supply is considered a balanced housing market. Anything below that would be a seller's market in which sellers have an advantage over home buyers. Anything above that would imply that buyers have an advantage over home sellers. So in general, just kind of think of it this way. When we have a month supply, according to Redfin, above 5 months, this means that buyers have an advantage. Therefore, we're in an environment in which prices are decreasing, whereas a month supply of less than 4 months means that sellers have an advantage, and therefore home prices overall should increase in that environment. One thing I will say is that according to the Arizona Realtors Association, they post on a monthly basis that in order to have a balanced housing market, we need a 6-month supply. And I always talk about how that's absolutely wrong. So I will applaud Redfin here, saying that a more balanced real estate market is in the range of 4 to 5 months. I would say it's actually closer to 4 months because about 12 months ago, let's just say 12 to 24 months ago, the month supply was about 2 months. So the month supply doubling in a short period of time could imply that home prices would decrease. That's exactly what happened last year. So take a look at this. Here's a chart looking at the month supply from 2020 in gray, 2023 here in orange, and then here's 2021 and 2022 in red. So back in May of 2022, the month supply was at 2 months. And by the time we hit approximately November or December, the month supply was at 4 months. So the month supply doubled in less than 12 months. That's one of the reasons why home prices decreased so much in the second half last year, even though the month supply did not even surpass 4.5 months. So in my personal opinion, we can't have a blanket statement and say that, yes, we need to have the month supply at this number in order to have a balanced housing market. In my opinion, again, it depends on the pace of the increase or decrease in the month supply and also the time frame as well. Because again, in a span of about 1, 2, 3, 4, 5, 6 or 7 months, the month supply doubled last year, and that really shocked the housing market and caused home prices to fall last year. There's 2 more things I want to share with you guys. Number 1 here is the share of price drops, according to Redfin, is at 5.3%. This is coming up or coming down from the highs of around 6.5% that was set back in November. So the share of price drops is decreasing, but it is seasonal though. As you guys can see here, it decreased big time in 2022 and in 2020 and 2021 during this time frame here. But again, if you guys want to see home prices decrease greatly, we would need to see this stat here going straight up, just like active listings and new listings. However, we're not seeing that just yet here. Lastly, here's a look at the average sale price to final list price ratio, which does not account for the fact we're seeing price reductions. In any case, at 98.7%. I believe that was actually the same percentage that we saw 1 week ago. So this means for the houses that sold over the previous 4 weeks, on average, the home seller sold their house for approximately 1.3 percentage points less than their final list price. It has been decreasing ever since the summer months, which is normal. But what's not normal here is what happened last year. During the summer months last year, that ratio was at 102.5%, which means back then, houses were selling for about 2.5% over the seller's asking price. And by the time we hit this time last year, they decreased to less than 98.5%. So because of that steep decrease we saw last year, that's one of the reasons why the ratio here is a little bit higher compared to last year, but it is still below 2020 and 2021. With that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value of this video, of course, please like and subscribe as well. Hope you guys have an awesome day. I look forward to seeing you on the next video.